This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Alex Svanevik. Alex is a data guy, he's a data scientist, and he is the CEO at Nansen, which is an analytics platform for various blockchains, combines on-chain data with a growing database of lots of different crypto wallet addresses. Quite a powerful platform, I believe. Welcome to the show, Alex.
Thanks very much for having me.
Hey, it is a pleasure. So, look, I mean, let's just do what we always do at the beginning. Just love it if you could briefly introduce yourself. Love to hear a little bit about your background, anything in particular that maybe points you out as a data guy from an early age, and then we'll dig into Nansen.
Yeah, that sounds good. So my background is in artificial intelligence. Graduated in 2010 from the University of Edinburgh. I started my first company back then. Didn't know anything about business, so gave up after about a year to go into management consulting and hopefully learn a bit about the world of business. So I worked a few years with very different industries than crypto, things like seafood, banking, insurance, and luxury retail. And then after that, I went back to my data roots and started working as a data scientist in a media group in Europe. And I was there for 4 years. And in 2017, I discovered Ethereum, which led me to resign from my job to go headfirst into the crypto space. And I moved from Barcelona to Hong Kong, where I built up a data team at a small crypto startup. And then have been basically working on Nansen since late 2019, together with my co-founders, Evgeny and Lars. And so, yeah, at this point, we're growing pretty fast. We have gone from 8 people to 80 in about 1 year. And we've done 3 fundraising rounds, and it's been a fun journey so far.
Awesome. And look, Alex, I don't know if you remember, but you and I have spoken before. We did a podcast together back in 2020, like quite reasonably soon after you'd launched. And so at the time, I think there weren't many on your team, and you at that time you were basically Ethereum only. So, but I've kind of kept an eye on you guys just a little bit since that time, and well, as you've alluded, the team has certainly grown, and the number of blockchains on the platform has grown as well. But I suppose before we get into that, for anyone who's new to Nansen and maybe didn't hear our first show, would love it if you could maybe just give the kind of the origin story for Nansen and what is the platform for? What is the problem that you're solving? Yeah,
so when I started working in crypto, I noticed that actually one of the things that attracted me to crypto was that there was an abundance of data. And then at the same time, there weren't that many mature analytics products in the space because it's still a very young industry. The only thing you had was basically blockchain analytics for things like anti-money laundering and fraud detection and things like that, which was geared towards enterprise, tax authorities, law enforcement, and so on. And it was very expensive. So, hundreds of thousands of dollars a year to buy a license. That was on the one side of the spectrum. On the other side, you had a lot of free tools, but they weren't really, super high alpha when it comes to, picking up investment opportunities, trying to do due diligence on them and so on. So we figured maybe there's room in between here where you can try to take some of the intelligence from the platforms that are geared towards things like AML and make them more useful for the man in the arena, right? The person who's actually investing in crypto, who's using crypto products and crypto platforms. And we believe that there was a willingness to pay for such a product as well, because if you can help them, basically help them make more money through investing and trading, then the ROI should be, self-explanatory. So we kind of fill that gap in the middle where, sophisticated investors and traders could get more information about what's happening on the blockchain. And what we do at a high level is that we pull data from all these different public blockchains like Ethereum, Phantom, Polygon, Avalanche, lots of different blockchains. And then we enrich the data with our own proprietary wallet labels and entity information. And so that means instead of seeing, hey, wallet address ABC sends $50 million to wallet address 123, you can see, hey, Alameda is sending 50 million into Binance, for example. So it just gives you that real world context layered on top of the blockchain data. And it helps investors discover new opportunities, perform due diligence, and also get notified in real time when certain events happen that they should care about.
Yeah, that's exactly right. And look, we'll talk more about some real world examples as we go into the show, and also, I'd love to use some of the data points out of a report. It's really, I think the report is called the State of the Industry Report 2021. So it's a good snapshot of what happened across all the different sectors in crypto last year, put through using data from the Nansen platform. One thing I'm curious about though, Alex, is I'm pretty sure we discussed this first time you were around, but I can't remember exactly where we got to. But at the time, there was Ethereum was on Nansen, and you've since added a number of different blockchains, but still no Bitcoin, I think. Just love to hear the thinking there. And the reason I asked this is because I was just looking through your tweets today, and you put out a few funny tweets about the KPMG adding like one Bitcoin to their treasury. I know I know this is satire. You were joking, but yeah, talk me through what you're talking about there.
Yeah, that joke was mostly referring to the fact that KPMG Canada has added Bitcoin and Ether to their treasury, and I just found it kind of funny. I just kind of imagined a scenario where they literally just bought a tiny amount of Bitcoin or Ether, and it's actually, it would work, right? It would be a pretty viable marketing strategy. You get so much free exposure,
exactly.
And not just that, but you actually, among the big four, I don't know if you've ever worked with one of the big four, like auditing firms, right? KPMG, Deloitte, EY, PricewaterhouseCoopers. And it's very hard to distinguish the four from each other, right? They're kind of interchangeable with each other. But now KPMG did this very clever thing where they become the Schelling point for crypto folks or crypto companies, right? They become, at least that's what I imagine was part of the intent here, right? That they can be the default choice for crypto companies like Nansen, for example. Right now, we're speaking to pretty much all the big four to get help with various different things. And now, KPMG is a bit more top of mind because of that move. So it's a pretty clever thing that they've done. And I have no idea how much they bought. I said on Twitter as a joke that they bought 1 Bitcoin, but I actually have no idea. But yeah, to go back to your first question on different blockchains, we definitely focus on smart contract-based blockchains.
Right.
And right now, we have support for Ethereum, Polygon, Phantom, CeeLo, Avalanche, Binance Smart Chain, and Ronin. We're also going to add support for Arbitrum, Solana, and Terra quite soon. And why no Bitcoin? I guess there are two things here. One is to consider the kind of market around us and the world around us. So I mentioned earlier that there are some other blockchain analytics platforms primarily focused on AML and so on, and they have been very focused on Bitcoin to the point where it felt like, do we really want to spend years catching up with them on Bitcoin specifically, which is their wheelhouse, right? We're not competing with some of these AML companies. At the same time, the technology in many cases can be quite similar. And so we felt like, okay, maybe you're starting at a disadvantage if they've spent years trying to build up support for Bitcoin and they're extremely good at that. Perhaps Ethereum, is a better place to start because our our anecdotal input from others was that these other platforms were not that good on Ethereum. And then the other component here is that we ourselves, like myself and Evgeny especially, were quite deep in the Ethereum ecosystem, and we understand Ethereum very well. We are, very plugged into that ecosystem. And so we figured, we probably have a better chance at becoming the best analytics platform for Ethereum, given our own knowledge and interests. And then you could also say that, I do think that, not to upset any Bitcoin maximalists out there, but I do think that the world probably, is going to use smart contracts in some way. And I don't see the Bitcoin ecosystem taking that role. And so, we figured it makes more sense for us to focus on smart contract-based blockchains. So those are some of the considerations that went into, why we don't support Bitcoin. Maybe last time I was on the podcast, I said, we'll add it soon. I can't actually remember it because we were considering it. But after, reflecting a bit more, I think it makes more sense for us to carve out that niche around smart contract platforms, which is a very, very fast growing niche as well.
It is, and look, that makes perfect sense, Alex, because I think Bitcoin now really Bitcoin is Bitcoin. The people buy and hold Bitcoin, and they just kind of buy it, as a store of value or digital gold or however you want to think about it. But it's kind of interesting from, I guess, a trading point of view. But really you're just kind of buying and selling a Bitcoin. But most people that are in crypto for any length of time, if they have a Bitcoin position, they're probably just happy holding it, and they're not too concerned about kind of short-term movements on the Bitcoin chain. Whereas with Ethereum and all these other smart contract platforms, there's a much richer, more active developer-based platform ecosystem, and you have these subsectors such as DeFi and NFTs, which are, I think, as you kind of alluded to, really fast moving, really fast evolving, and NFTs in particular we saw last year really capturing the imagination of new segments of the population that are coming into crypto, right?
Yes, absolutely. I think that's another great point. There's just generally so much more activity happening, and it's just intellectually, I think, more interesting as well to follow what's happening there. NFTs, of course, were a massive driver for growth for Nansen last year, and I think they will continue to help us grow a lot. Just to give you an idea, when we added NFT dashboards, we had this on the roadmap for a while, but we thought, this is kind of a fun feature that some people might be interested in, and we added the NFT dashboards, and in less than 2 months, we tripled our revenues just from adding NFT dashboards. And so I think it's one of those things that it's very easy for people to dismiss. They think it's just, it's like a small, fun thing, but it's actually maybe the key thing that's bringing in new people to the crypto space these days. So it's definitely a huge area.
I agree. Well, talk us through. I think NFTs is a great use case and a great example to kind of talk through the capabilities of your platform. So, if we're using NFTs as an example, then what are some of the metrics or functionality, if you like, that is possible with the NFT dashboards?
Yeah, so the mission of Nansen is to surface the signal. And so when you land on the homepage of Nansen with your account, there's a little widget that's called Hot NFTs. And that surfaces the hottest NFTs in measured by trading volume in the last 24 hours. And you can drill down on that and you can see, hey, right now I see Terraform's, Meebits, and Pixelmon at the top of this list. No investment advice there. Do your own research. But that's what I see right now. At the same time, there's also been a lot of so-called wash trading of NFTs lately with a platform called LooksRare.
Yes.
And so, and so we also allow for filtering of marketplaces, so you could actually filter out the LooksRare volume. And if I do that, I see that the list changes slightly. I still see Pixelmon high up, which was launched 29 hours ago. So maybe it's that's actually a lot of volume for one new collection. I might look into that after the podcast, to be honest. And then there's Cool Pets and Azuki. And so just to give you an idea, like you land on the platform, you haven't sort of gone on Twitter, haven't spoken to, you know, your other NFT trading buddies or anything, but right away you get some signals from the blockchain on what's actually happening, what people are trading. And then you can go from there and you can drill down into one of these collections. Let's say Azuki, which is one of the top 3 right now. And there I can see how has the price of the collection overall evolved, what's the trading volume like, but also you can get super granular and you can look at individual transactions, and you can see so-called smart NFT buyers, who are addresses that have successfully maybe minted and sold or flipped NFTs in the past, and we flag them as what we call smart money wallets. And you can also see, you know, who are the top accumulators of these NFTs lately. So, you know, right away you get this kind of God mode view, as we call it, where you can think of this as like an X-ray vision on what's actually happening on the blockchain. And instead of just falling for all the shilling that's going on Twitter, you can actually see what people are doing with their funds on chain.
Yeah, well, so and keep going, Alex. How is this different from, you know, OpenSea, for example? You know, they provide some, I guess, some basic analytics, and that you can see what you know, the top projects at any given time, and the volume and the floor price and so on. So, how much deeper can Nansen go?
Yeah, so you know, you do have some basic overall stats on OpenSea. I think the thing that distinguishes Nansen, the sort of basic ingredient that allows for a lot more powerful analytics, is that we have this labeling of wallets going on. So we will add entity information in some cases. Let's say that you know, you have A16Z, or you know, you have Alameda or Wintermute, where we have basically found out that those wallets belong to those funds. We will label them, so that's additional information for you. But we also do behavioral tagging of addresses. That's what I was talking about earlier with the smart money labels. So for example, we have about 4,000 addresses that are tagged as smart money. And instead of having to follow, you know, tens of millions of addresses, or even like 100, 200 million addresses on the blockchain, you can zoom in on the ones that have the highest signal in terms of trading, investing, and so on. And so we keep this kind of highly curated list of addresses that just allows for much richer analytics. So that means you can see that at an individual level. Like you can see specific addresses that we've highlighted as smart money addresses, or specific transactions. So it goes super granular from the macro down to the micro. But you can also see aggregates on top of these segments. So maybe you want to look at smart money wallets as a segment, right? And you can see charts on how the smart money segments have been either buying or selling the different NFTs, instead of having to look at each individual address. So you can really like think of it as almost like Google Maps, right? You can start at the top, you see the whole globe, and then you can really zoom in to like the individual street if you want, and get the activity that's happening there. And then depending on your analysis and what you're looking at, you'll get different insights at each level.
Yeah, that's fascinating indeed. And Alex, I think you said, I don't know, you said X amount of wallets somewhere in there, but I'm just looking through your report from, you know, the State of the Crypto Industry Report 2021, and it says this year on Ethereum, over 1.2 million wallets minted NFTs from a total of 18,000 projects, totaling around 187,000 ETH and 7.2 million in transaction fees generated. So when you say that last year there were 1.2 million wallets minting NFTs, so is that, are you making a sort of a rough distinction that there are approximately 1.2 million different people minting NFTs at some point during the course of last year? Is that roughly where we're at, we think?
I mean, there's not a perfect correlation between
Yep.
humans and addresses, right? But so this is really talking about addresses. And if I have like 5 different addresses,
Yeah.
that's going to be counted as 5 in that. And we know, like anecdotally, I personally have multiple wallets.
Yes.
Other people have multiple wallets, right? So it's hard. It's a bit like cookies on the internet and translating cookies to individual human beings. It's not one to one, but yeah.
But if that's the case, then Alex, the point I'm making is, to me, 1.2 million people seems quite low. And if it's actually in real life, let's say a half or even a quarter of that, so that means that under 500,000 people worldwide minting NFTs at the moment. And we use the expression on crypto Twitter, we are early, but that just shows how early we are.
Oh yeah, absolutely. I think it's one thing. One thing is important to keep in mind, and this is partially why I think many people have made a lot of money with NFTs. That similarly with other crypto projects, it's often harder to be early, right? Like the earlier you are with successful projects, the more gains you will have typically on your investments. Of course, not in all cases. Many projects fail and so on. But this is the same with NFTs, and it's actually not trivial to mint an NFT because it's kind of a jungle out there when it comes to new projects launching. And finding out about Bored Apes before everyone else, or finding out about hash masks or pudgy penguins, right?
Yeah.
And these collections are actually pretty small, right? Typically they're about 10,000 of each. And so imagine the minting process of something like Bored Apes. People would go in, they would mint maybe 20 Bored Apes in one go. And that doesn't leave a lot of room for people to be a part of that initial mint. But then the secondary trading is where most people are active. And so I think you're right in that observation that it's still very early, but it doesn't reflect like the total NFT market, because most of the NFT market is actually secondary sales. Right, so the minting is really only the primary sale that goes on with NFTs.
Yeah, understand. So would you hazard a guess as to how many? I don't. Is it common knowledge how many people have like OpenSea accounts, for example? I know that's not really a thing, but yeah.
I should probably know this. I do have some stats because we have a dashboard that compares LooksRare, which is a newer NFT marketplace, with OpenSea. And just to give you an idea, if you look at how many people have traded NFTs in the last 24 hours, it's about 55,000 right now.
Right.
And so of course, if you think about the visitors to OpenSea, the website is going to be much higher, right? Yes. Because most people don't buy NFTs every single day. But it tends to hover between like 40 to 60,000 in terms of daily active users on transactions at OpenSea. And of course, LooksRare is much smaller than that, but they have pretty high volume because people tend to do this watch trading activity. But that gives you an idea. And in terms of registered users on OpenSea, I actually don't know from the top of my head. I don't want to speculate, but from that number, it should be a lot higher than the daily active traders on OpenSea.
You mentioned wash trading before in regards to LooksRare. So, and I know a little bit about this. We published an article on Brave New Coin that was kind of a deep dive into LooksRare, and I mean I didn't write it myself, but I read it, and as I understand it, it's kind of the it's just the way what LooksRare are doing is great. Don't get me wrong. One of what they're doing is they're trying to reward people that use their platform, and part of the way that you can do that is if you're an active buyer or seller or trader of NFTs, then you get rewarded in the Looks token. But the way that the tokenomics is structured, I suppose it kind of incentivizes incentivizes that trading. So of course that leads to wash trading. So I'd love it, Alex, if maybe you can kind of talk about how some of the I guess incidences like this wash trading and other slightly nefarious practices that probably rife right across all parts of the crypto ecosystem. How much of this can you kind of discover using Nansen?
Yeah. First of all, wash trading, is not new, right? And it's been going on for a long time in the crypto world, for various different reasons. You have exchanges who, in some arrangements, have offered negative fees, meaning basically you get paid to trade to market makers. In some cases, this is not talking about NFTs, but about crypto in general. There was a very, I think, interesting example as well with an exchange called Fcoin. I think that's the name of the exchange. At least they had their own token called Fcoin. And they were basically, pioneering what they called trans fee mining, meaning that you had, transactions that would generate fees, you would get coins back. And so this is actually really similar to the model that LooksRare has today, except back then, that exchange basically collapsed, and it was never really celebrated as a great success. On the contrary, I think it was perceived as a big flop. But later on, of course, you had other forms of liquidity mining incentives that came into play with things like Compound, right, where you could not trade, but you could borrow and lend on Compound, and you would earn comp tokens, which basically kicked off the DeFi summer yield farming craze in 2020, with things like Yearn Finance, Sushi Swap later on, and so on. So, incentives for activity is something that's become pretty common, and I would say like an integral part of crypto these days. And so LooksRare is basically taking OpenSea and saying, hey, we want to create a community-owned OpenSea. So it's similar to OpenSea, except you can earn these Looks tokens when you transact. And so, it's not a new thing, but it's interesting that it tends to you have new iterations and it evolves. And, the LooksRare team has basically said that this is part of the plan, right? Like the point is to get activity and volume on LooksRare. And so this is how they're trying to bootstrap the liquidity to get people to trade. And the jury is still out on whether or not this is going to be sustainable, or like if it will actually create sustainable trading volume on LooksRare. But in Nansen, you can see it pretty clearly if you just look at the hot NFTs dashboard, and you just filter between. Even if you don't filter, you will see the top collections being much higher in trading volume than other collections, because if you don't have royalties on the collections, then it's economically viable to simply wash trade some of these NFT collections. So you can see it pretty clearly stand out, like in the data. We do have a wash trading filter that is currently in development, and I have the Nansen dev instance open in front of me now. And the idea is you can just toggle on or off a wash trading filter. And so that's something that we're going to release very soon. Maybe when we release this podcast episode, it will already be live. But this is something that the NFT team has been working on for a while now. So on the one hand, you can filter different marketplaces, but on the other, you can even have a more sophisticated wash trading filter that you can toggle on and off.
Absolutely fascinating, Alex. Look, I could talk NFTs with you all day, but I want to switch gears slightly and cover some of the other sectors as well. Should also, for anyone that's kind of listening and going, well, Nansen sounds pretty good. Maybe I could. I could use some of these insights, some of these dashboards. Just talk us through, I guess, the product offering in terms of like costs for, I don't know, do you have different tiers for is this an institutional thing? Is it a retail thing? Is it both? How does that work?
Yeah, so it is definitely a retail thing. I mean, we do have institutional customers, but if you're active trading NFTs or crypto and you manage a sizable portfolio, you could definitely get an Nansen account. It costs $149 a month for the standard tier, or if you pay yearly, you basically pay $1,400 a year, and that's the standard plan. It has pretty much all of the magic that you see if you go on YouTube, or if you see people using Nansen, pretty much all of it is in standard. However, you can also get a VIP subscription, which is 10x the price, 1,490 per month. And this gives you early access to new features. It gives you certain dashboards that you don't have in standard, like hot contracts. You can also download data to CSVs. You get filters in the tables, which is extremely useful to narrow down certain things you're looking for in the different tables. And you also get more smart alerts that you can set up. In the standard plan, you have 3, and VIP, you have 100. So you can really create a huge inventory of smart alerts. And then we also have an alpha plan, which is more like a membership plan. You get all the stuff you have in VIP, but you also get access to a Discord community of other alpha customers. And the alpha team has a pretty big army of research analysts who are constantly monitoring what's happening on the blockchain, but also reaching out to our social network on what's happening in crypto, speaking with early stage projects who might not have launched yet on the blockchain. And so we arrange like AMAs with early stage projects. We do war room calls so that analysts can give updates on what they're seeing in the market. And also other alpha customers can discuss amongst themselves what they are currently thinking about the market, what they're investing in, and so on. So that's $3,000 a month. And it's actually a waiting list for it, because we try to keep it, we try to make sure that everyone who comes into that plan can contribute to the overall group. So those are the main plans. We also have some institutional offerings, namely the API, the Nansen API, which is mostly used by like market makers, trading desks, and so on. And we also have Nansen Query, which allows you to write SQL directly on on-chain data and do your own analyses if you have like a data science team or a research team internally. And it's typically used by venture firms, for example, and larger institutions that have people who can actually run queries themselves. So those are some of the options we have.
Awesome. And how many people are in that alpha group, the one with the waiting list, Alex?
Right now, I think it's 170 people in the alpha tier. So we try to keep it relatively small. At some point we had, I think, 500 plus on the waiting list. So, if we wanted to just open the gates, we could have, but I think it's important for us that the group is, it's manageable. It's growing in sort of a way that doesn't cause too much noise, right? The whole point of that tier is to actually surface the stuff that matters, right? You don't want to have too much noise and shilling and whatnot going on in that group. So we decided to try to grow it in a managed way rather than just opening up the floodgates.
Well, it makes sense. I mean, the whole idea with Nansen is to surface the signal from the noise. So you want to do that as well.
Exactly.
Talk to me about kind of growth metrics for you guys as a brand or a company users, because you'll be all too aware, Alex, that these kind of growth metrics in terms of everything from exchange signups to website visits to podcast downloads, I'm sure it's the same for you guys. It does tend to mirror what's happening in the market. Specifically, let's just use the Bitcoin price as the proxy, really, because it kind of is as simple as that. When the Bitcoin price is up, website visits are up, podcast downloads are up. It's good times. But the reverse is also true. But I'm sure it's a bit more nuanced as well, maybe for guys like yourself. So, yeah, I mean, how you talked about growing the team to 80 odd or something. So obviously you're experiencing user growth. How's it been over the last year or so, and what do you expect to happen this year?
Yeah, it's been pretty wild. I think our revenues have gone up 20x in 1 year. So definitely we've experienced what you could classify as hyper growth. I do think that the crypto market is more interesting now because you have you actually have many different markets instead of everything moving in tandem all the time. In particular, I think that the NFT market is, I wouldn't say completely uncorrelated, but it's somewhat decoupled from things like Bitcoin, for example. And one thing we've noticed is that even if the price of Ether has like softened in some instances, now it seems to be recovering quite nicely. You've seen the NFT activity still just pumping. And I feel like for the last year, every month, someone has declared NFTs dead. And the next month is just bigger than the last month, right? And January, I think, I guess don't quote me on this one, but I was doing some back of the envelope calculations. And I think maybe partially because of the LooksRare wash trading, but I think the traded volume of NFTs in January was actually higher than all of history before it. so
Yeah.
you know, the NFT market is kind of its own beast, and there's definitely some correlation with crypto markets. On days that are very red, if you see crypto like price of Ether tanking like 10% in a day, we don't typically see that many signups, which is kind of, you know, understandable. And when things are really good and things are pumping, there's more of an interest in buying subscriptions. So there is some correlation, but it's also the case that crypto has a lot of different submarkets now. And the nice thing about Nansen is that we cater to a lot of these different submarkets, like NFTs is one sector, but DeFi is another one, and tokens in general is a third one. So yeah, overall, there is some correlation, but thankfully, the market doesn't move 100% in tandem these days anymore.
Yeah, look, I said we'd move on from NFTs, but you know, one thing that has always, well, the way I've kind of come to understand NFTs, because I'm fascinated by NFTs. I enjoy NFTs myself, but you know, the same way that before NFTs were really a thing, people would feel they would get FOMO, right? Everyone knows what FOMO is, that you get FOMO over some altcoin that might be going up. But, you know, I've completely lost interest in that kind of side of the market now, because the NFTs are just so much more interesting. And I think that's why it's so hard not to be bullish for just this growth and adoption wave to continue, because it's just so much easier for the average person, particularly young people, to kind of, you know, buy into NFTs. Doesn't matter whether it's a cartoon cat or an AI brain or, you know, whatever it is. There's an NFT for everyone, really, and it's just so much easier for people to get emotionally invested in an NFT, right? Does that make sense to you?
Oh yeah, I couldn't agree more. I think most of us who've been in crypto for a while, we've experienced trying to persuade people on why crypto is the future, and 9 out of 10 times people will just ignore you, right? They don't find it interesting. With NFTs, it's almost flipped around. It's like I haven't really talked about NFTs to a lot of people, but they come to me, and they're like, "Hey, you know, I want to buy NFTs, or I just bought an NFT. You know, check it out." It's really fascinating how a lot of people just engage with the stuff more than they engage with crypto. And I think I've said this a few times before, but I think it's kind of simple if you look at it. Most people don't care about finance, and crypto historically has been about finance and trading. Most people, if you just go down the street, you ask a random person, they don't care about what their interest rate is on their savings account in their bank, right? They don't necessarily monitor like the financial markets very much. They don't care about that. Now, if you care them, if you ask them, what's your favorite movie? What's your favorite game? Who's your favorite influencer or celebrity or whatever? Everyone will have an opinion. And NFTs are actually targeting that part of the world, right? It's the culture section that everyone has an opinion on and has like preferences for. So it's just a much bigger area to address than these kind of abstract, numerical, quantitative things that crypto has traditionally represented. So I think DeFi brought the capital into crypto, and NFTs are bringing the people into crypto.
Yeah, you explained that really well, Alex. Really appreciated that. Let's just cover off before we start to finish off. I wanted to talk about, I suppose, different layer one chains, because that's kind of what you do. Different layer one smart contract platforms, ETH killers, Ethereum competitors, if you like. some of them did as much as NFTs did extraordinarily well in 2021, so did the likes of Avalanche and Solana, competitors to Ethereum. So you cover some of these chains, so I imagine you keep an eye on what's happening. Approach it however you like. Just love to kind of understand what your thinking is on how some of these different smart contract platforms play out. Is it a multi-chain world? Is it winner take all, or is that not how you think about it?
I used to think it was winner take all, and I thought Ethereum, is going to be the dominant blockchain, full stop. I think what changed it for me was actually in 2020 when, maybe a lot of Ethereum fans might not like this, and I am a huge Ethereum fan myself. But when Binance Smart Chain came out and just got millions of users very, very quickly, I understood that maybe there are different trade-offs you could make with regards to decentralization, speed, and security that people are actually comfortable with. And you could have, you could have multiple different chains that trade off different variables in different ways. And it made me think that maybe this is more like, I don't know what the best analogy is. If it's operating systems, is it browsers? Is it gaming consoles? I'm not sure, but all of these different areas, although there are very strong network effects, they tend to have multiple different options. And I think it's going to be the same thing with blockchains. I think that, Ethereum is probably not going to be the only blockchain that has organic usage. So, Binance Smart Chain, as much as it was ridiculed by Ethereum fans, it did prove that people are happy to use blockchains, even if they don't have the same decentralization or security guarantees that Ethereum has. And then when you got other chains that move in, and actually they're more decentralized than Binance Smart Chain, then it seems like, well, there might be room for those too if they're able to compete with Ethereum on other axes or other dimensions or other metrics. So if it's faster to use it, if it's lower gas costs, right, then you might be able to use it. And people will use it, which we can see in the data. You see hundreds of thousands of addresses active on many of these blockchains that I don't think people would have predicted 2 years ago. Having said that, I do think that Ethereum has a huge advantage when it comes to the developer ecosystem, right? That's the main network effect that it has. I mean, of course, it has several different network effects, but the developer ecosystem is incredibly strong. No other blockchain is even close to it, including Bitcoin. And so it's going to be really interesting to see how this plays out and how different blockchains try to, get closer to competing with Ethereum. And there are different strategies that you can use. I think people are going to be writing like PhD theses about this stuff in a few years on how the different blockchains position themselves. For example, what's the best strategy? Should you use the Ethereum virtual machine and Solidity to attract current developers from the Ethereum ecosystem into your own ecosystem? Or should you instead use something like Rust and a different programming language and attract a different pool of developers who, might not be engaging with the Ethereum ecosystem yet? And then you can grow by having a completely different developer base who might make completely different products, right? There are different strategies that you can use to grow these ecosystems. And for me, it's very fascinating to see how it plays out. And of course, as a data person, it's also really interesting to see the data in real time and like how these chains are getting traction. What are the most active applications that are being used? And in fact, just to do a little plug here, even if you don't have a Nansen account that you're paying for, you can actually see a lot of cool dashboards on different chains, including Avalanche, Arbitrum, Binance Smart Chain, CLO, Phantom, Optimism, Polygon, and Ronin. If you just go to pro.nansen.ai, you'll find your way from there, I think. But there's, you can go to /multichain/Avalanche, for example, and you can see how the transactions for Avalanche have been increasing over time, pretty much linearly. And it looks like yesterday it had about 1 million transactions. And whereas the gas costs, the transaction fees in US dollar terms, are actually really constant because of certain optimizations that Avalanche has done, which is really fascinating to me because it shows that there's some degree of scalability with Avalanche that you might not have in certain other blockchains.
Fascinating indeed, Alex, and it's really products like yours, what you guys are building at Nansen, that are really allowing people to make sense of what is just such an incredible, fast-moving industry. And man, it is going to be exciting times. It's going to be an incredible year, I think. But I think we better leave it there. We better go to a quick break, and then we'll come back. We'll have some fun. We'll finish off with the very famous Crypto Conversation hot take round.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices. BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
All right, we're back, and I'm with Alex Svanevik. Alex, of course, he's a data guy, and he is the CEO and the founder, I think, of the Nansen blockchain analytics platform. And as I mentioned at the kind of the beginning of the show, Alex, we've done a podcast before, so I imagine we've done the hot take round before, but you're just such an interesting guy. You're a good talker, and you're deep in the ecosystem. So I think it'd be fun to do it with you again and just see where we're at. So I hope that's okay with you. Basically, I just like to finish off with some rapid fire crypto conversation hot takes. Are you up for it?
I am up for it. Let's go.
All right, Alex, we know the answer to the first one, but let's put it out there. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I'm a highly multi-coin person.
Yes, indeed. What would you say, Alex, is your firmest conviction, crypto opinion?
Oh man, that's a tough one. My firmest conviction is that this is the biggest revolution since the internet, and I think it will profoundly change the world in ways that we cannot yet imagine.
I love it. All right, well, Bill Gates famously said we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, pick your poison here: DeFi, NFTs, Bitcoin even, Ethereum, or just kind of, I guess, blockchain as a whole. But what does it look like in 10 years' time?
I definitely think that some profound changes will take place. I don't see us getting to 1 billion people interacting with crypto through something like MetaMask. That is not to say anything bad about MetaMask, but I think that there's going to be, as much as we sort of dislike intermediaries, I think there's going to be intermediary platforms where people might just be using apps that feel like fintech apps, but under the hood, they are actually interacting with blockchains. So I think that's one way that we will get to mass adoption. We're going to abstract away a lot of the technicalities of blockchains. I think another thing that feels, I don't know if I'd say inevitable, but I'm very confident that this will happen. I do think that NFTs, we've only scratched the surface of NFTs. We're still in the NFT stone age, I would say. There are so many things you can do with NFTs. There's so much stuff we haven't explored yet. It's really just at the proof of concept stage. And so it seems obvious to me that, whether it's gaming, culture, influencers, collectibles, art, all of this stuff is going to be digital in one way or another. And NFTs is basically the technology that allows for it. So I think NFTs is something that
looks cute, funny, silly in the beginning, but it's actually much bigger than people realize. And I think it's going to be a huge part of the world in 10 years.
Yeah, it reminds me of that quote that I can't quite pull out of my head, but it's something like, you know, the next great technology revolution starts out looking like a toy. And yeah, that certainly describes NFTs.
Yes.
Sci-fi author William Gibson famously said, Alex, that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
I think universal basic income. I mean, I guess universal basic income meaning people get some sort of fixed amount of money delivered to them, typically from the government, right? It's how people think of it. And of course, it's almost like an oxymoron to say that you have an uneven distribution of universal basic income. But I think that I've started wondering if crypto might be the sector that creates some form of universal basic income. And you kind of, most people who are active in crypto almost experience this on a regular basis when it comes to things like airdrops, you know, very, very generous yields from different projects. And so I don't know exactly how it's going to play out, but it seems to me that giving ownership to people who are using different products, even if they're not building them, is one way to make sure that pretty much anyone can receive financial upsides in different ways. So I think UBI is one area that it could be interesting to see if the private sector or crypto in particular comes up with a solution before the politicians did.
Yeah, that would be amazing to see. I think UBI is fascinating, and you know, it kind of seems like it's a logical part of a better future world. Maybe that can be bootstrapped via Web3, kind of what you're saying. But yeah, would love to see it. All right, let's start to finish off, Alex. And look, we're starting to get weird, so we might as well go full noise, get even weirder. Time to zoom out. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
I tend to think that the best way to predict the future is to create it. So I think it's still open, right? Either could happen. There's certainly a clear path towards a very positive future. I think inevitably there's going to be some kind of merge of machines, of man and machine. So at some point I would imagine that, you know, humans blend with AI somehow, and machines, if that's like, you know, body parts or biology, or if it's kind of connecting directly to the metaverse, you know, directly through some kind of neural link or something. I think that's a positive outlook in my view. You could also see a dystopian one, right, where like the robots take over, or you have some country that basically develops insane technology to dominate the rest of the world. But I think it's an open question. I think there's a path towards a happy future, and our job is to just make sure that we're going down that path instead of the other one.
You're exactly right. That's all any of us can do. Is, you know, if you're a good, positive, optimistic person, yeah, no point in doing anything but trying to build out a better future for everyone. Perhaps that's hopelessly naive, but hey, we're all here.
Hey, yeah. I think like on that note, I do think the crypto industry, one of the things that attracted me to crypto was actually the fact that it gives you a positive future. I mean, there's a lot of negative futures being talked about with climate change, with increased geopolitical tension, and so on. But crypto actually gives you a bright future. Like, it's focused on a positive future, which was, I think, one of the things that attracted me initially, and I think one of the reasons why a lot of people get so engaged in this space.
Yeah, couldn't agree more, Alex. There's, as Michael Saylor likes to say, Bitcoin is hope, and I certainly identify with that. But also NFTs, that's part of the attraction of NFTs, as much as there's scammers and bad actors. But kind of broad strokes, NFTs are just fun, and the communities are optimistic. But yeah.
Yes, absolutely.
All right, this has been incredible, Alex. Thanks so much for coming back on the show and sticking around and having a good old chat. Have really enjoyed it. Oh, the final, I didn't ask you, last question is, what is your favorite science fiction book, film, show, or universe?
I think I do really like the book, Do Androids Dream of Electric Sheep, which later became Blade Runner.
Philip K. Dick.
Philip K. Dick. I love the book. I love the movie. Prefer the older version with Harrison Ford, but the newer one is pretty good as well. It's just philosophically super interesting to think about, robots and AI, and the moral implications of retiring them. So it's a great book.
I love it. All right. Take us out, Alex. Tell the people where they can go to find you on Twitter, anywhere else you like to hang out, and where they should go to get involved with Nansen. And go for gold.
Yeah. The best place to go is nansen.ai if you want to check out the product. You can also find our Twitter account at Nansen_AI. And you can find myself on Twitter, Svanevik. Look for a penguin with a Viking helmet, and you'll find me on Twitter.
Awesome. Thanks very much, Alex. This was a lot of fun. All the best, and bye for now.
Thank you so much, Andy.
All right, there you go. That was Alex from Nansen. That was fun. I think I enjoyed talking to Alex first time around back in 2020. Definitely enjoyed this one. Yeah, fascinating to dig into NFTs and data, and so look, if you want to check out the Nansen platform, plenty of useful dashboards to get an edge, particularly if you're a trader or an NFT flipper or whatever you like to do. I'm sure Nansen can help you out. All right, team, thanks very much for listening. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. And feel free to give us a nice review in Apple iTunes, podcast app, all that good stuff. But for now, we're out of here. Thanks, team. Thanks for listening. This was the Crypto Conversation for a Brave New Coin.